Well, for those of you who have looked at Zero Hedge today, you saw a number of interesting items, not the least of which was that today was the lowest volume in 10 years for non-holidays, at least. Pretty sad. Everyone's left the market. With good reason, too. And look at the NANEX study of showing how much robots have taken over all the trading. There's not many of us humans left. But I'm glad you're here, human. I wanted to go through some long-term index charts. And it's not all raving bear stuff, but give us a little bit of perspective. Today was a pretty good day for me. It's the kind of day I like. And what I mean by that is there was three good things. One, the market went down, albeit a teeny bit. Two, my portfolio went up, albeit also kind of a teeny bit. But third, the amount of cash I have in my portfolio is still very, very large, like 65 to 70% fluctuating between there. So the cool thing is that my portfolio went up more than the market in general went down, even though I only had like 30 to 35% of my cash in positions. And these are not options or anything. These are just plain old equity positions. So it's one of those days where like well-chosen equities paid off. So hurrah. But I still am beaten into complete paranoia and fear about this market, sadly. And so thus remain quite light. I have 40 positions, all small, all short. And the largest position of all is cash, 65%. Now, this is the, we'll start off, of course, with the euro. On the one hand, I will say more firmly than ever that I think this is a fantastic short play. Although you would think on a day that Greece has all but defaulted that we'd have more than like, 0.04% plus on this thing. It's essentially unchanged on the day. Last night, it was doing some kind of interesting things. So we opened and kind of gapped down and meandered down all day. And then, of course, as required by federal law, we got to close near the highs of the day. That's the law now, whether it's ES or the euro or what have you. So that's what we got. Anyway, ironically, I don't think I even have FXC as a short right now. That's right, I don't. I'm short a little bit of gold, but I'm just basically looking to that as a driver for these other shorts. But as I said, I wanted to talk about some long-term stuff. And so let's just thumb through a few indexes and indicators and chat about those. I'll just go through these in the order that they are listed. And as a reminder, first of all, a little embarrassing here, I'm not going to boogie about clicking anything anymore because you know what? It doesn't make any difference. So don't sweat it. But I will remind you, to be helpful, that you want to watch this in high quality mode, 720p. So in the lower right, YouTube should remember this stuff, but just make sure you click the little gear icon in the lower right and make sure you get 720p, the high res, and then full screen so you can have a chance at seeing this. Anyway, here's the NASDAQ composite. The good news, maybe very good news for our bullish friends, is that we are really cutting above this price level, really pushing into highs not seen for about 12 years now. It was down a teeny bit today, but sadly, the whole premise of like us being in the throes of a secular bear market and us being just in the eye of the storm is kind of getting damaged pretty badly. I guess with enough trillions of dollars of clown bucks, Bernanke can keep anything afloat, and it seems to be working. Sorry to say it, but the bad guys are winning. So here we are. There's really nothing bearish about this chart at all. And even if we started to fall, even if we fell 100 points or even more on the NASDAQ composite, even more than, we could plummet 200 points and it still has every real prospect of moving higher. It would take It would literally take a break of this trend line to really damage the bullish case. The bullish case has a lot going for it. It has a whole series of higher lows and higher highs ever since the bottom way back on October 3. It's cut above very long-term resistance. This is just, it makes me gag to say it, but this is a pretty bullish-looking chart. Now, not so bullish is my old buddy HUI, the Gold Bugs Index. I'm going to smoke out a bear market somewhere, damn it. This guy's still nicely formed, and my analog is still quite intact for this one. And Old Faithful fell again today. So as long as we stay beneath that midline there at 554.9183, I feel just pretty good about miners short and gold bugs short and all that. I'm purposely chit-chatting here because the Indo takes a while to load. It goes way back to the time of handlebar mustaches and pre-automobile days here. This is a very long-term chart. So we can see here the Roaring 20s, the Great Depression, and pretty much the uninterrupted bull market from really 1932 all the way up to 2000. Really, about 68 years of fun with capitalism. And since then, we've been in this huge, confusing, sort of like back here. I mean, if you look back from about the mid-60s to the mid-80s, not a lot of clear direction. This is kind of what we're going through right now. Look at this. See? Just kind of womp, 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 womp. I mean, as far as like an honest-to-God bull market, I'll get rid of the drawn objects, that, my friends, is a bull market. Went from 700 on the Indo to 11,000, and the great crash of 1987 was like a blink of an eye in the grand scheme of things. Even the great Paul Tudor Jones was talking around these days about us entering a Great Depression and all this other stuff. Clearly never happened, but the man's nimble enough to change his mind, and he's doing all right. But this is a bull market. If you chop off the crash there, you can see a very pure bull market. And God bless it. This was driven by technological revolution, improving profits, well-managed companies, all these good things, and God bless America. This is capitalism at its finest. Since then, however, it's been, we had our bear market after the internet bubble burst, which everybody thought was a great big deal. And then we got our housing bubble. Then we had the so-called financial crisis, which was a much, much swifter bear market. This guy took 2+ years to pan out. This one over here, the fun really only lasted a year. And then we've had our clown bucks bailout since then. Ever so briefly, for like a week or so, we got a taste of the good life again during this plunge, but that didn't last. And we were once again threatening to cut above those highs from May. So if we do that, the next thing to look at is the this channel line at the top. So we could see a break above that, and that's kind of the next question mark. What happens? Obviously, this is a very newsworthy event. All the mainstream media will go gaga over, highest level since 2007 and all this. They get very excited about that kind of thing. Could happen. I mean, goodness, it would take very few points on the Dow to push us into that level. And, if people joke about how small and unimportant Greece is, I mean, it's still a well-known Western country. It's got some kind of economy and influence and some financial impact if it goes under. If the imminent default of Greece causes 17 points off the Dow, 0.13%, I mean, what if tonight they announce some breakthrough agreement or something? I mean, it just ain't falling. It ain't falling. Here's the NASDAQ 100. The good news for the bullish folks is that as with the composite, we have broken above that resistance line. I don't even know if I call it not great news, but the caution to be aware of is that it wouldn't take much more to get us to this upper part of the range again. You can see this long-term channel going back about a decade. We bottomed out on this channel both in November of 2008 and of March 2009, kind of double bottom there. Have been rising ever since. And so we are just about up at the upper portion of that. Russell 2000, I'm going to skip these a bit. I don't want to go on too long. Russell 2000, kind of a similar setup to what we saw back in 08. We've got we had a very big topping pattern here, smaller one here, and I've drawn in each case this descending trend line. We are, as with so many of the other things I showed you, just at the cusp of cutting through that. It would not take even a modestly higher day on Tuesday would push us above that, and that makes the next level to watch way up there at 868, which was the May 2nd highs. So today may have been nothing more than a tiny, tiny breather, and it was tiny. There was no follow-through on the selling. S&P 500 has already broken through its descending trend line as we cut in close. I've even gotten rid of it because it didn't really serve any purpose. This goes back to the roaring 20s. We zoom in here, and we can see that it's kind of all clear on this one. I mean, the next technical hurdles, which are minuscule, would be besting the July 7 high, and then besting, of course, the May 2nd high. Very kind of malformed, not much to read into that one. And just to wrap up with GDX here, this, as with the Gold Bugs Index, upon which it apparently is based, remains really a favorite of mine on the short side. I usually use this for day trading. If I get bold at some point, maybe I'll get a decently sized position on the short side. But, you know, I kid about this whole Greece thing, but once we get this headline thing out of the way, I mean, honestly, good, bad, or indifferent, I just want some kind of conclusion on this. It never seems to come. But this is just hanging over all our heads. Maybe that's why the volume is approaching zero, because there's so much uncertainty right now. You know, what's going to happen with it? How will the market react? So I am happily long cash and happily short just a smattering of carefully chosen little positions. And I'm not going to get serious about this market until some of this fog lifts. So I hope some of these long-term charts have been of interest. And that's really all I've got to say. And I bid you a good evening.